Hi, I'm Alex, welcome to the channel and thanks for tuning in. So this is the second video that I promised on the announcements made earlier this week by HITID, and sorry it's taken a little longer than I promised. I've just been crazily busy in my actual job and there's only so many hours in a day, even if you don't end up sleeping. So this video is all about the bought deal, which was announced on Tuesday, and in this video we'll discuss everything which we need to know about it. It also seems to have reignited the dilution debate, with loads of people seeming really worried about this, suggesting it's a scam and all sorts of other things. Now, I had hoped that we'd move past this, as I must have spoken this for hours and hours now on the channel, but clearly there are still some people who have some concerns about it, so hopefully this video will address all of those in full. I have talked about things in a certain way on this channel before, so in this video I'm going to try and address it in a different way in the hope that that may also help as well. We'll also discuss a few other things that are really important, which I haven't seen anyone else talking about, so you definitely don't want to miss this one. Please smash a like button, it's really appreciated. I know I ask this in every video, but it's really helpful in our battle against clickbait on YouTube. It's really starting to work, the algorithm's slowly starting to appreciate that it doesn't only need to promote clickbaity content, and thank you so much for your help in this. You're doing an amazing job, please keep it up. If you're new to the channel, make sure you're subscribed. If you want to see more content, join the private Discord, the live video calls and everything else, then check out the Patreon. And as always, I'm not a financial advisor, this video is purely for educational and entertainment purposes only, but let's get straight into it. So I'm going to break this down into really basic terms, so if you know this and it's a bit painful, I'm sorry, but I feel that we need to get this addressed without any misunderstandings once and for all. So basically, remember a few months ago, HITID issued a $100 million base shelf offering. Basically, that's the equivalent of the company saying, over the coming months, we'll need $100 million, but rather than making lots of individual filings, we're going to do this now, and so we're going to have quicker access to the funds as and when we need it. When this was announced, loads of people got upset about the impact of this on the overall share count, arguing that actually it was going to be highly dilutive for shareholders. Clearly, with any share offering there is this potential. However, we have discussed at length on this channel how actually the track record of HITID has been pretty impressive, and actually the capital's been deployed in ways which are massively accretive for shareholder value. We will dig into this more in a moment, so bear with me. Anyway, HITID undertook the reverse split in preparation for uplisting the Nasdaq, and then it seemed actually that the dilution concerns seemed to die down a little and fall down the agenda. Now obviously the filing earlier this week, initially for $15 million and then ultimately for $20 million, the bought deal, is just the company saying, okay, we made those filings before, now we're actually going to ask for 20 million of this because we need it. Now we'll come on to exactly what they may need it for in a moment too, but there are a few really important things about this. First, the great sign is the demand from institutional investors. The increase from $15 million to just over $20 million shows their conviction in HITID and their belief in their company's ability to execute on its strategy. Now actually who these institutional investors are is actually really important. Firstly, we know that both ATB and Echelon are the book runners. However, in these situations they don't actually hold the full amount of the investment themselves. They actually syndicate that down or sell it down to other banks and other investors. Now earlier this week as well, the underwriting agreement was actually filed, and from that we know who the other institutional investors are that are acquiring shares in HITID. They are Beacon Securities, Desjardins Securities and Roth Capital. Now I always hear people saying, follow the smart money, basically meaning do what the institutional investors do, because they have more resources to do more DD, have greater levels of insight, and ultimately just have better access than retail investors. This is a perfect example of where institutions are investing into a company, and so if you follow that mantra, you really should not be concerned here. Now another really important point here though is that all of those names are respected investment analysts as well, and all of them currently have analyst coverage and price targets for other companies in the cannabis sector. Given this information, I think we can be fairly confident that we can expect to see some of these names, if not all of them, actually soon initiate coverage on HITID. Clearly, as they have invested in the company, you would expect that they would initiate coverage with buy ratings on the company, and that the price target would be significantly above where it is today. Now let's see, but I do think this is something that we may well see in the coming weeks, and clearly that's great news for the stock price. Now the other really important thing to consider here is the terms of this offering versus other bought deals with ATB and Echelon as well. Now in this offering, at the time it was published, the offering was at a much smaller discount to the market price than previous bought deals were, and the warrant premium is also much greater than the previous deal was. Now I could go into much greater details of this, and if people are interested, please let me know and I will do. However, the really important takeaway here basically is that ATB and Echelon have a greater degree of conviction now, knowing more about the company and having seen it execute its strategy successfully than they did before, and that is clearly a good sign. Now, as with any share issuance, the most important thing to understand and to help shareholders determine whether this is good news or bad news is what the proceeds of this will actually be used for. Now as a reminder, recently HITID has opened a large number of stores and has also acquired Fab CBD, which did have a large cash component to the overall consideration of it. These actions will have used up cash, And so as well as providing more capital for the more store openings and more M&A, it also seems like a very sensible and prudent move by the company to strengthen its balance sheet a little ahead of the uplisting to the Nasdaq. Now, we have discussed it loads on this channel before, but there's clearly a big pipeline of M&A deals, and the uplist will help them get some of these deals completed in quick order. But having the cash and financial firepower is an important step in doing this. It's essential. So is this going to be accretive or dilutive for shareholder value? Well, looking at the company's track record, both in terms of delivering organic store growth and in M&A, this has clearly been done in ways which have been hugely accretive for shareholder value. Now let's look into some of the recent M&A to demonstrate this. Now we have discussed multiple arbitrage a lot on this channel in respect to HITID before. This is the act of buying companies' earnings for less than yours. An example of this being FabCBD, where at the time HITID was trading at 26 times its forward EBITDA and FabCBD was acquired for around 6 times EBITDA. In that example, on day one, you create immediately shareholder value, being the difference between the multiples that you're trading at and that you acquired at. So in this example, 26 times less 6 times, being 20 times, and then that multiplied by the EBITDA which you're acquiring, so $4.3 million. So in that case, the FabCBD deal has created around $86 million of incremental value for the company. Clearly, that's highly accretive. Now let's explain this concept slightly differently. The market at that point in time is valuing HITID's future earnings at 26 times, so $26 for every $1 of future earnings. In the FabCBD deal, HITID was able to acquire additional earnings for only $6 for each $1 of earnings. The same case was with the smoke cartel deal, again done on the same basis, creating value through multiple arbitrage, or said differently, buying earnings for less than your own earnings are valued at. Now a very good question here is, hold on, why has this not been reflected in the valuation yet? Now, great question. However, once the consolidated earnings are reported in the next quarterly report, then this is when we should see the uptick in valuation, as this will then be more transparent and clearer to the market and it should appreciate it more. At this current point, the market is actually not valuing HITID at around 26 times forward EBITDA, because that's not factoring in the acquired EBITDA. When you actually do factor that in, assuming FabCBD generates say $5 million of EBITDA next year, which is around 15% growth on last year's $4.3 million, and which also excludes all of the potential synergies, both revenue and cost synergies, which could be generated from that deal. The market is actually, on the consolidated EBITDA, now valuing HITID only at around 16 times. This is how institutions are seeing it, and this is a fact, there's no disputing this. Either you see 16 times forward EBITDA as a massive discount to where HITID should be trading, and once this information disseminates more into the market, when we see the earnings, it will drive the valuation up. Or alternatively, you think this is the fair value for HITID, and in turn you believe the rest of the cannabis market is grossly overvalued, in which case you should be taking short positions on all of the larger MSOs and the ETFs. Now this concept of multiple arbitrage is not a new one at all, but it's not one that's massively understood amongst the retail investor communities. However, you can be certain that the banks are all over this and know exactly the dynamics at play here. Listed companies have executed strategies like this for years, but typically it's been done in less sexy sectors where the magnitude of multiple arbitrage is a lot lower. Think things like facilities management and companies trading at 8 times EBITDA, which are then able to acquire mum and pop operators for around 6 times EBITDA. Clearly, HITID is doing a great job of this, and the magnitude is much larger. Now, valuation aside, however, such acquisitions are clearly accretive. They all have a clear strategic rationale, which will enable the generation of more revenues through cross-sell and cost savings through greater efficiency. The fact that the founders of the companies acquired are also accepting an element of their payment in HITID shares should also show how they do also believe in the value of the combined businesses and how future value can be created here. I've said it before and I'm saying it again here. If HITID can continue to raise capital through equity issuances and deploy them in deals like the deals they have done so far, at great valuations with massive strategic rationale and where there's a clear value creation through multiple arbitrage, I would be happy for them to be raising capital all day, $1 billion in capital, and just simply do that. It's as simple as that. For us as investors, it creates shareholder value, so it's good. This is a clear part of the strategy, and it will continue. There will be more equity raises in the future, and once this shelf offering is fully drawn, I expect them to come back with a $200 million or $250 million offering in the same structure. The company will be further down the line, and it will be clear how effective management are at delivering on the strategy. If this is something that concerns you, then I really do not think you should be invested in HITID. There are plenty of other stocks where this is not a dynamic and not a consideration at all. With HITID, this will continue, and this ongoing debate about whether it's dilutive is crazy. We've always said this is a long-term investment, and so be patient, let it play out. Another reminder that I think people seem to forget is that Raj Grover, the CEO, is the largest shareholder in the company. This ultimately means that dilution has a bigger impact on him than anyone else. Trust in his track record and his ability to deliver accretive M&A, great consistent organic growth, and just be patient. In summary, I think we're going to have a really exciting year ahead of us with HITID, some exciting near-term catalysts, but also some longer ones too. In the next week or so, I do expect the uplist to be completed and for HITID to become the first cannabis retail ever listed on the Nasdaq. Then I expect to see more interest from new investors, both retail and institutional. And yes, that's obviously what we have seen in this last week, but I expect to see it continue. And also, I do expect to see increased and new coverage from analysts of HITID. After that, I think we will see another great M&A deal brought in, which again will be hugely accretive for shareholder value. This is just the start of it all, however. Be patient and don't take short-termist views. Anyway, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel, make sure you're subscribed. If you want to see more content, want to be involved in the private Discord group, the live video calls, then check out the Patreon. And as always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear all the different perspectives and opinions, so please get involved. Thank you so much for watching, and I'll see you in another video.